Ladies and gentlemen, good evening. Happy Valentine's Day, Internet. Thank you for joining us here on Rates and Ladders. We're one person short today, but I'm very happy to be on a little online date with Neil and Dom here. So, evening, gentlemen. How are we doing?
Evening, buddy. Yeah, all good. I'm all good. If I look like I'm dancing after Dom's music, it's because my back is in pain and I'm having a spasm go up my back. So if I do look very odd, that is the reason why. But yeah, good to be here. Dan's missing this week because he's wooing his woman, so he's doing bits basically. So fair play to him.
What do you reckon? You know Dan better than me and Dom do, I'd say, Neil. So what do you reckon Dan's doing? I mean, like what would his vibe be on Valentine's Day? I feel like he's getting a foot massage, or there's some like rose petals on the bed. There's something like that.
Well, I actually know what he's doing because he asked me about it. So I'll let you go for your guess. Yours is a foot massage, is it?
Yeah. Well, he's not joining us, so it must be something important.
He must be busy. Dom, what's your guess then?
I think he's gone to something like Nirvana.
Oh, yeah, you're both very close. Yeah, he has gone down that route of spa vibes. Bless him. So
yeah,
wow. There you go.
I did catch up with him earlier because I went on my Valentine's date, which was my afternoon dog walk with Louis, which was the best Valentine's ever. And yeah, I caught up with him and he said he was already on the wine. So fair play to him. I hope he enjoyed it.
But anyway, the three of us are still here to give a quick update on what's going on in the property and mortgage world. So drop your questions and comments in the comments section, property related or Valentine's related, whatever. We're here to chat for 20 minutes or so. But Dom, I'm curious what's going on in the mortgage market. I know, not an awful lot can happen in a week, but any big changes since we last spoke, or any rates coming down below 4%? Where are we up to with mortgages?
Yeah, so 60% loan to value. There are a couple of deals in the market are sub 4%, which might sound a bit odd if the base rate's at 4%. But as we know from previous chats, the base rate doesn't set the fixed rate market. That's the swap rates do that. The rate war is alive and kicking, guys. So we're fully expecting a bit more pressure. And the other thing, I suppose, that's changed, so I wasn't here last week, so it's sort of 2 weeks worth, with just changes in criteria, loan to income, multipliers, etc. You'll have to excuse me, I've picked up a virus or something this week. So overall, the lending market is alive and well. So those that do need to find a deal will find one without a shadow of a doubt, and I think it will get better in the short term. They're not going to go below 3, but we should see a bit more pressure into the high 3s, maybe mid. Depends how aggressive somebody wants to be, really. But yeah, it's all good. It's all good.
That seems positive in terms of it being under. The thing that I've always noticed is obviously the loan to value. Are there many options now for first time buyers or the people with the lower deposits, or what are the options there? Has much changed in the last couple of weeks, that front?
You can get a deal up to 95%, no problem. It's the same scenario. Last time I checked 95, it was over 5%. And if you drop, if you can go from 5% deposit to 10% deposit, it's worth just under a percent in rate. So it makes a big difference.
Yeah.
And I did a calculation with a couple of clients and said, basically, if you only put in 5%, they're going to charge you the other 5% that you don't have in interest over the 5-year term. So, you're paying for it over the period as the risk premium. So 10% really is the sweet spot. Once you've got 10% plus, you're going to start hunting in the areas where, and the rate will just get better and better until you get to 60%, basically.
Cool.
Yeah, nice. It doesn't seem like there are many instances where a 5% deposit is a good idea.
Not really. I mean, it depends. I've got a big purchase going through in London, and the the couple have a very, very good income. You know, their combined income is significant, and they don't want to commit all of their cash right now, so they've gone with 5%. But even in the period we've been looking at that, I think we're on our 5th re-offer. So they started off at X%, and then as the pressures come down, you know, we get an alert, we go in the next day, we apply for the lower rate. And that's a hidden benefit of working with somebody like me, because we will deal with that for you. If you start trying to deal with, I don't know if you saw my post on Facebook about, you know, you can probably go to your bank and succeed in getting a mortgage.
Very good.
But it's probably not going to be the best outcome for you. And I saw another example of somebody who did a product transfer directly with their bank, and then it went through, you know, some months later. But in the intervening period, the bank had reduced its product transfer rates 3 or 4 times, which put the client a few grand out of pocket. Now, the bank's not going to monitor that and volunteer the better rate. You've got to have another pair of eyes on it, and that's what we do. Basically, it's a hidden piece of value that good advice firms offer their clients, because you deal with us and we worry about it, and we keep worrying about getting you the best deal until the time has passed. So it's an interesting time, but certainly you need, in my view, I mean, I would say this, wouldn't I? But you need somebody else looking at it for you if you're going to get the best deal. 100%.
I think that's to be fair, that's golden advice, and there's not many people that actually, when they look at going for a mortgage or buying a property, they'll be very quick to.
That's it.
Sorry, Neil, carry on. I'll pull it back up.
But yeah, there's a lot of people, when you're speaking to buyers out there, they'll go direct. But I've done this for 14 years and worked with different mortgage advisors along the way. But one thing that I've always noticed with financial advisors or mortgage advisors is they're very quick to give you new advice if there's something out there to be had, like you were saying. Whereas when you go direct to a lender, you've gone in the door, you've gone out the door, that's it.
I think in a market where there's downward pressure and change on rates, some people are cost conscious, right? I get that. I've got no problem with that. Some people, you know, and we're a fee charging business, and the fee isn't significant. It's just we have to turn a profit. You know, our costs are significant. We have to turn a profit, and part of that is by charging a small fee. Some people don't want to pay the fee, and they say, "Well, I'll just deal with it myself. I'll go direct to my bank." Fine. That may be the best rate. It probably won't, but it might be if you get lucky. But once you've booked that rate with that in-house advisor, who you're going to struggle to talk to again for weeks because they're always booked up far in advance, they won't then proactively tell you when the bank lowers their rates. So unless you're watching it and you're prepared to go back around the loop with it, you might have saved yourself 400 quid on an advice fee, but you're paying more over the term because you haven't got somebody intervening as soon as the rates come down to say, "Hello, Mr. Lender, we'd like a lower offer, please."
Yeah.
It's a false economy. If you only see the cost and you don't correlate it with the value. So I'm making a big point about explaining to people what you get for your money. You know what I mean? Yeah. And if somebody doesn't understand the cost versus value argument, then fine. You know, I've got no problem with that.
Yeah, we've reached that obviously in our line of work. I know Matt's the same as us.
Yeah,
we're not trying to be low service, high number, or high volume. We're trying to be good service, help the client, and in turn get you a better result and a better price, etc., etc. So I think we've said it multiple times where you get what you pay for, don't you? So pay someone who knows what they're doing to do what they're good at.
In that particular case, with the clients who are buying in London, in the time that we've been getting re-offers from the lender, we've put about £230 back in their pocket a month over 5 years. A month.
Yeah, there you go, and that's all the difference, isn't it? Because
they haven't had to lift a finger, they haven't had to monitor anything, they haven't had to make a phone call. We're just doing it for them. So you know they quite clearly get the fee argument because they've paid for the fee many times over. Arguably, I could have tripled the fee and they'd still be better off. But you know, we charge a fair price for the work that we do.
Absolutely.
To that point, I'm just going to bring up this because I think it articulates your point very well. Going to a bank for a mortgage just because you bank there and they happen to do mortgages. A bit like asking your mum for a haircut just because she happens to own some scissors. The best possible outcome. And it's true, isn't it? We all had, well, I definitely had a lockdown haircut. I think you did as well, Neil. And it's I've never been more happy to pay the £19 for my haircut.
Looking at the glare, which I must apologise for, I could actually do with that, some hair to cut. What I will say, that isn't my work. I nicked that from a guy on Twitter. On LinkedIn. I can't remember his name, but it just kind of summed it up for me, really.
It's public post, isn't it? It makes sense. But like I say, can't win them all. Unfortunately, some people will look at it at the initial value rather than the outcome or the over.
Yeah.
I've seen, especially in the past jobs, I see where there's a fixation on just paying the smallest fee. As close to zero as possible, losing sight of how much you're going to sell your house for, how much you're going to buy the next house for, and then the stress you're going to encounter in those 6 months. Completely losing sight of all of that and just being fixated on fee. It's false economy, like you say.
Tell me if you agree or not. And just on that, and I've been banging on about this for ages, but in the last 5 to 8 years, I've noticed more people want that easier life than ever before. Like, as in they'll prefer to pay. You still got some people, and it's funny because I've created a couple of memes. I've not shared them with you, Matt, but you'll probably appreciate them. But it's all about paying or trying to pay a low fee, but expecting a high service. It comes down to that at the same time. But I think that just goes throughout. I've noticed, I don't know about you guys, but I've noticed it a lot more in the last 5 years. People seem like they want that less stress, easier lifestyle, pay a little bit more and get the better outcome. So that's one thing that we massively thrive on, is making sure people are stress-free as possible.
I think it's interesting where people choose to spend money. Like some people will wear designer clothes and they'll insist on wearing designer clothes, even if they might not, afford them in logical terms. Something for me, I've noticed getting a bit older and having to, I had to call a plumber the other week, and I was just like, I don't want a cheap plumber. I want a plumber who's going to come around and fix it and answer his phone. It's those kind of things where it's like, I don't mind paying the money. I just want this problem to go away.
Yeah, absolutely. Yeah. Well, it's interesting because I think there was another topic of where we can save money with everything going on, wasn't it?
Yeah. So we're going to do a little cost of living segment. I know we were discussing each having a tip, but Neil, I don't think you're the one to ask for money saving tips. Although you did mention going to Costco for fuel last time, which I think is a good one.
Yeah, I did. Yeah, I've still not made it to Costco for fuel because, again, convenience. I've got a petrol station around the corner. Just stop there. I'm a typical convenience person, which, as I said, that's what I've noticed more so, which we were touching on. But if I were to give one tip, and this is only from my failure, I don't know my income and my outcome, or ingoings, outgoings, so to speak.
Your budget planner.
Yeah, exactly. I think I've attempted to do a budget planner once before, and I think, Dom, didn't we even look at one a little while ago, and I just gave up on it. So if you can, do a budget planner, because I haven't got a clue what goes on. So yeah, I'm probably the worst person for giving advice when it comes to money saving.
Shall I give you my top tip, Matt?
Go ahead. Do
a budget planner. And there's a reason that this forms a key part of any fact find that we do, whether it's a mortgage or protection or pensions or whatever it is. The budget planner, the expenditure planner, always forms part of it, because it's impossible to work out what you might be able to afford if you wanted to, or what you might be needing to cut out, or something which is just not adding any value at all to your life, unless you know where your money's going. So what the budget planner does for people, and it's not just for people that are struggling. This should be a standard thing. And I'll give you an example, because I went through this yesterday. I'm not immune to the cost of living struggles that we all are. So I took a bit of time yesterday afternoon, feeling a bit sorry for myself, to just go through my direct debits. And I looked at my Sky and thought, well, yeah, I'm locked in on the TV package to the end of September, but then we're getting a phone call the day that I can ring them and say what I want a better deal, and they will do deals for you. But I've got a Sky mobile package, and one of them's an iPad for my wife, and I noticed I was paying £7 a month for a SIM for 1 gig of data. Well, the iPad never leaves the house. It never leaves the house. So I rang Sky and said, look, there's no point in that even being. I don't even know why I've got it. And they said, yeah, no, that's fine. We'll just take it off. Now, £7 is not a lot of money, but if you imagine the number of people that have subscriptions that they've had for donkeys and they've never really looked at it, a lot of money. That's why subscriptions are so valuable to businesses, because they kind of bimble along. And I'm telling you, if you both did, and anybody viewing did a budget planner, unless they're like me when they're already doing it as a matter of course, you would find things that you would think, I'm not getting any value out of that. I'm gonna bin it.
I reckon I say this every time we talk about budget planners. I should really do one.
Yeah.
So. I think it's hard to do and stick to. It was only when I first got my mortgage, I was kind of got like privy to the benefit of doing a budget planner. But there's a difference, isn't there, Don, between committed, what do you call it? Committed expenditure and uncommitted, or so if you've got a gym,
so you've got committed and discretionary spend, basically.
Yeah. So like a gym membership or Netflix, you can cancel at any time, but like a car lease, you're stuck with that for the term.
Yeah.
Right?
Yeah. And it depends, some gym memberships are for the minimum 12 months and then you start to roll. So you've just got to make sure that you know where you stand and what you've signed up to. And I mean, gym's a classic example of, someone signs up and they start with a load of enthusiasm, especially at the start of the year. You get the January, I'm gonna do things differently this year surge, and then by February it's gone out the window because life gets in the way, and then December you're still paying a subscription you haven't been.
I was
madness.
I was a member of 2 gyms.
No need to stick your fingers up either, Neil.
I was a member of 2 gyms at the same time, right. And to be fair, the reason I'd done it was a good reason to start with, because I had a personal trainer a long time ago. And he was a friend of mine, so he used to train at a specific gym, but I wanted to also train at a closer gym. So I was a member of both gyms, and then after his PT sessions and stuff, or after that had all finished, I just carried on with the gym. I just left the gym memberships running, and I'd only go to the one around the corner every so often. I never even went to the one that's in Reading after his PT. So I had, for about 2 years, I was paying 2 gym memberships and using one probably 2% of the year. So
I'll tell you another one that gets away from people is your mobile phone bill, especially if you're buying the handset as part of the contract, because you'll reach a point you've bought the handset, but they keep charging you the same amount of money.
Yeah.
Or they'll have repriced a SIM only package downwards. And that was another phone call I made yesterday, because I'm paying £25 a month. It's for my youngest son, and I'm trying to get him off the payroll in that respect, so that he can go and earn his own money and have some responsibilities that he's got to pay for him. But when I spoke to that supplier, I'm paying £25 a month for 40 gig of data and unlimited calls and texts, and they've got a package on the table for £18 a month for unlimited data and unlimited calls and texts. Like, well, you haven't told me about that. Why not? Yeah. How long have I been paying £7 a month for nothing? Well, they gave me £25 as a gesture of goodwill and switched it. But you get the point, if you don't look at it, you're never gonna be on top of your money.
It's classic phone contracts. People don't think of it, but you're basically just buying the phone on credit and getting a bit of data on top as well, right? And then, but if you go past the 24 months, you can still be paying 30, 40, 50 quid a month for just a SIM only contract. We've had I know we're about to wrap up, gents, but we've actually had a question from Mr. Macbeth. He's taking a break from Valentine's date night to jump on here and ask a question. Appreciate. So before we go, this is probably one for you, Dom. If Ian or anyone else is remortgaging a year from today, will he be all right?
Or should he move abroad? I love that question.
I mean, I think he should buy a place in the sun and remortgage his property in the UK, because, you know, much better to have a bolt hole in the sun. No, you will be okay, Ian, because everything that I'm reading suggests that by 2024, inflation is going to be below the government target of 2%, and, you know, rates will adjust accordingly. So yeah, absolutely. I think it's probably going to be a good time to remortgage. I think this year remortgages are going to get better anyway. Next year, I think it'd be even better. So absolutely, I wouldn't be too fussed about it. I think the worst is over from, you know, that disruption last year, and it will get better this year into next
year. Yeah, I'm feeling good about it. Actually.
We'll see how well that ages in December, perhaps.
Yeah. Well, it'll probably be one of these ones where we watch it back and go, we did get it right.
We're on record, so it's here now.
Absolutely.
Let's hope so.
Was someone clicking a pen just there? Was there? Did anyone else hear that clicking sound? Was that?
Yeah, it was me. Sorry.
I knew that.
He's such a fidget, isn't he? Such a fidgeter.
All right, gentlemen. Well,
did you think you were watching The Last of Us?
But the little things coming out of the woodwork.
Around,
like, where's it coming from? My computer's broken.
Well, there's one species of the fungi infected people are called clickers, aren't they? Anyway, sorry, I'm talking rubbish. Yeah,
we're both feeling rubbish, so maybe we do. Maybe we have got the clickers.
It's the most in-demand property in Reading at the moment. Another question. Thank you, Mr. Macbeth. So the two bedroom house, there's not a lot of them available, and anything that I see coming up, anything freehold, 2 bedrooms or 3 bedrooms, it's just flying like that. There is more of an appetite for the 2-bedroom flats and the 1-bedroom flats, but anything freehold, 2 or 3 bedrooms, is still crazy high demand. And I would imagine that's probably what you're finding as well, Neil.
Yeah, I was going to say our bread and butter at the moment are 3 and 4 bedroom houses. I've got one that Matt, you kindly helped me with today that will absolutely go bonkers. I've got one in Shinfield that's due to have 8-9 viewings so far. It only launched 2 days ago. 9 viewings so far for this Saturday. Their neighbouring property or opposite property is a 4-bed detached, and that one's already going bonkers just from the socials. So yeah, 4-bedroom family homes, 3-bedroom semis where people are moving up a little bit or lucky enough to be first-time buyers. That is the creme de la crop.
Yeah, it's still those family homes, isn't it, that are in demand.
Yeah, people. I've noticed, obviously, with rental still being quite high, there's a lot of people that have been renting for quite a long time, and now they're going, right, we need to do something about this, and they're now feeling the pinch on the rental, understandably, and they'll want to jump into that 3 and the 4 bed. They'll have some savings behind them, and obviously they're not jumping for the 1-bedroom, 2-bedroom market. They're jumping for the 3 and the 4. So
yeah, which is why if you're rented, it's always a good time to look at and speaking to someone like Dom. How we do it.
That's probably someone calling me trying to buy a 3 or a 4-bedroom house. So.
So with that, I've got some steaks to cook.
Yes, enjoy your Valentines.
I've got a client call to make for another hour, and then I'm going home. Yeah,
get back to your woman, Dom. I'm gonna go out. I'm gonna go out for some beers with my mate.
It is his Sanjay's going to finish off with a gag.
Before we go, we'll end on this. You ready for it?
Yeah, because I don't know the answer.
Love it.
Very good. With that, we're going to sign off.
Not bad. See you later, guys.
Valentine's, people.